First of all, welcome to this session, and maybe a very, very quick introduction from my side. So I'm Christopher, one of the co-founders of Finoa, which is a crypto custodian based out of Berlin, Germany, with a team of roughly 80 FTE at the moment. And in the next 20 minutes, the topic of the talk is how institutional investors actually are managing and participating in the digital asset ecosystem or the crypto ecosystem. And I'll go a little bit through how the ecosystem has evolved over the last couple of, let's say 10 years, how institutional investors can invest into that space and what are actually their needs, but also their barriers. And what is our role as Finoa, or what is the role as a crypto custodian, and how are we actually empowering those investors to invest into the space? If you have any questions in between, feel free to add them to the Q&A board, and I'm happy to answer them if we have time at the end or later in the Q&A session. Maybe we quickly talk about the evolution of the crypto ecosystem. And I'm not going too much into detail, but if we take a look back, we see that Bitcoin needed roughly 10 years to reach 1 million active addresses. And I think that's a very, very good sign that every innovation needs quite some time until we really have that mass adoption, or until we are close to mass adoption. And what we have seen over the last couple of years, though, is not only that we have seen Bitcoin as a blockchain protocol, but we also have seen an ecosystem being built around a new technology, around the new thesis of decentralization. And we also have seen a lot of new blockchain protocols, and we named here, for example, Ethereum or Polkadot, with completely different use cases and with completely different, let's say, technological standards than the Bitcoin protocol. And around those protocols, it's not just that we have seen those, let's say, layer 1 protocols, so the native blockchains, but we also see ecosystems forming around those layer 1 protocols. And we have exemplarily here the Ethereum ecosystem. As we have been seeing over the last couple of years, a lot of decentralized applications, a lot of use cases, a lot of, let's say, also companies and business model built around that. And Ethereum is one example, and the other example we have outlined here is, for example, Polkadot, which also sees a lot of, let's say, applications and a lot of infrastructure providers and a lot of companies building on top of those layer 1s and providing services or building features within that ecosystem. On the other hand, what we have been seeing is what everybody nowadays talks about, decentralized finance, or in short, DeFi. And this is also something which has been around for a couple of years, like be 4 or 5 years, but we just really have seen a very, very steep let's say, increase and adoption since summer 2020. So what people in the space called the DeFi summer. And since that, it's a tremendous growth. So for example, last year, if you take a look at the chart, we were roughly at 20 billion. By now, we are already at 100 billion in assets which are locked in the DeFi ecosystem. And I think what sums it very, very well up is a quotation from A16Z, and I think it was from Mark and Andreessen, who actually said, "Crypto feels like the internet in the early days of the internet, Web 2.0 or smartphones all over again." And that ties a little bit to the first slide, which I was showing, that Bitcoin also needed 10, 12 years to really get into mass adoption, and to have the breakthrough that a new technology, a new innovation really also makes it into our day-to-day business. And it's not just that. I think what we have seen over the first 10 years has just been the start. And the more you are, let's say, in the ecosystem, and the more time and also the more capital you're spending there, you'll find a lot of new use cases which are evolving. I think one thing which everybody right now is talking about are NFTs, like non-fungible tokens, right? We see a lot of gaming activity in the blockchain space. We also see a lot of, let's say, more trading activity, like coming from alternative investors like hedge funds and so on and so on. And we also see, and this is the screenshot on the bottom, we also see more and more political and regulatory interest in the whole topics. That can be on the one hand side positive. On the other side, I think there are also a lot of let's say, traditional regulators, traditional bodies who are still fighting what we have been seeing in crypto and what has been built over the last couple of years, or which might be built over the next couple of years and decades. I think one thing we can all agree on is that crypto is fundamentally different than what we have seen before. And I'm not necessarily only talking about the difference in the technology stacks, but we are talking about a completely different movement, moving from Web 2 to a Web 3 environment, where the power is going back to the users, the power is going back to the creator, if we think about the creator economy. And on all those different aspects, be it on the one hand side of the technical aspect, be it on the other hand side from the concept of how things are being created and how value is actually also distributed. And those people who know a little bit about crypto and Web3, we are not talking about a shareholder value, but a stakeholder value. So you do not necessarily own the good or the token anymore, but it's kind of a utility which is integrated into the token. And all those concepts are very, very different to how the, let's say, the traditional world in many phases works as of today. The big interesting question on that end then is, how can institutional investors or corporations participate in that space? And I think the next slide is a little bit an example how institutional investors and corporations look at it, right? So on the one hand side, you have the crypto ecosystem, and I mentioned a couple of things like layer 1 networks, layer 2 solutions, decentralized applications, staking validators, and so on and so on. And on the right hand side, you have like all those institutions who want to deploy, who want to invest money on the one hand side, but who also want to participate. And I think there has been a very, very big mismatch and a very, very weak connection between these different, let's say, angles from the left side to the right side. And that had, on the one hand side, as said, a completely different technologically stack. On the other hand, it's a completely different thinking. And what we also have been seeing, that the regulation was missing for those institutional investors on the right-hand side to be comfortable to invest into the space. Because what were their key concerns, or what are still their key concerns? So on the one hand side, I think what institutional investors value very, very much is the whole aspect of trust. And trust can be displayed through regulatory standards on the one hand side, but also through technical security on the other hand side. I think the second big aspect is the whole part of usability, right? So crypto and decentralized finance, for example, is still very, very tech heavy. And especially for non-tech savvy investors, navigating through the system is something which is very, very difficult, and where a lot of those investors do not necessarily feel comfortable with. The thing on the top right, the agility point, is something which I mentioned earlier on, right? So we are 10 years in this ecosystem, roughly 10 years, and it's evolving day by day, week by week. There are new use cases, there are new protocols, there are new solutions out there, and to keep up to space with that and have like steady access to those things is something which, for more traditional investors who are used to play in a world which doesn't change that fast, is something what they are, where they don't feel that comfortable with, to be very honest. And I think the last concern they had is the operational requirements, right? So as said, crypto works completely different, and there was no holistic solution like we know it from the traditional world, where those investors could actually manage their assets, where they could store all the different cryptocurrencies, where they could trade, where they could lend, where they could stake, etc., etc. Nevertheless, and that's the interesting point, institutional money is flowing into the market, and we are currently at an all-time high. And I think here, as an example, we have brought you just the venture capital investments into the crypto industry. And what you especially see that it's since 13, 14 continuously increasing. Yes, we had a big spike in 2018 when there was the ICO craze happening. But in general, you see really what venture capitalists call this hockey stick, right? So we see that crypto as an asset class, crypto as an investment class is coming more and more into the mainstream. Yes, this is still in the venture capital space, which obviously is on the more alternative and on the more risk-taking aspect of things. But we also see that more and more traditional money is flowing or is coming from family offices, hedge funds, and so on and so on. And this is something which we typically see as a lot of other innovations coming from the US and slowly also moving into Europe. The big question then is, how can those institutional investors invest then? Because if you remember a couple of slides or minutes ago, I was saying, okay, there's a huge bias still against crypto, and there are still a lot of concerns. But I think by now the industry and the infrastructure providers have found a variety of solutions which enable those investors to invest into the space. So obviously there are two general investment opportunities. On the one hand side, you have the direct investment, right? So you as a fund, you as a family office directly invest into either liquid tokens like Bitcoin and Ethereum on the one hand side, or on the other hand, you invest into so-called SAFT or safe agreements, where you invest into a blockchain company, and at some point in time, this blockchain company actually issues tokens as part of their network, and you receive those tokens. So you as an investor are directly holding the tokens. This is obviously for those investors who are more crypto native and to have a better view on the crypto market. And everybody basically you speak to in crypto says that this is the preferred choice. On the other hand, we also acknowledge that there are a lot of players who would like to have access to crypto as an investment class without really owning the token. So they rather invest for a return strategy, for a yield strategy. And therefore, what we have seen, especially over the last, say 1.5, 2 years, are a lot of, let's say, indirect investment opportunities that can be ETPs, so exchange-traded products like exchange-traded funds or exchange-traded notes, that can be trusts, that can also be asset management funds or venture capital funds. And especially if you take a look how the venture capital industry in crypto has been increasing and how let's say the funds are becoming bigger and bigger, I think you see that a lot of this institutional capital is also flowing into that space. And then obviously you have everything which you also have in the traditional financial world, with what we here call synthetic replication, which are derivatives, options, futures, and so on, which is obviously not so much for those players who want to be participating in the space, but rather for the more trading heavy, the prop trading heavy players in the market. I think one very, very important aspect I wanted to stress here is the yield generation opportunity, and by that also the active participation in the crypto ecosystem, right? So crypto is, as said, it's something which is set up decentralized, and it's something where you as an investor have the same or not even more rights than when you invest in a traditional security or in a traditional bond. And I think what a lot of people don't see is that also the yield opportunities in crypto are very, very significant compared to what you see in the traditional world, and especially if we're talking right now about, let's say, zero or even negative interest rates. That's something where investors should really look at. And I think one very good example for that is staking. And if we talk about yield generation, we're not necessarily talking about price increases, but we're really talking about a yield kind of interest which you're able to generate and which you're then also able to receive as an investor in the market. And this part of yield generation is not just only there to generate yield for the investor, but also to actively participate in the market. So to vote on different things, to make sure that new transactions are mined and validated, and so on and so on. And I think what you see is that this active participation and thereby also the yield generation is becoming more and more important. You have been seeing since 2017, 2018, a move from new protocols towards proof of stake. And I think also the second largest protocol, Ethereum, is moving into proof of stake. So let's say Bitcoin is still one of the very, very few who are running on proof of work. And we see a general trend to move towards, let's say, more active participative consensus mechanisms than what we have been seeing in the early days of crypto. And I think this is also, let's say, shown in that slide over here. So you see that also investors want to participate more and more, because what we pray is that crypto is decentralized, that crypto is participative. And what we do not want to have is what we have here on the left side of the news, that those protocols, those, let's say, technology layers are controlled by a small number of people, because that's actually not the whole hypothesis or the whole thesis of crypto and decentralization. So I was talking a little bit of or about how the ecosystem evolved and how institutional investors are slowly entering the space. And let me maybe jump 2 minutes in how we actually as Finoa try to, let's say, encourage institutional investors and enable institutional investors to participate in the space and then also to manage their digital assets. So when we started back in 2018, we especially saw those problems from our own pain points. So not being able to have an investment or a management solution. And we started to say, okay, we have to solve that not only for us, but also for institutional investors who will eventually come into the space. And what we actually have been built and obviously continuing to build is that we build this bridge between the crypto ecosystem and the institutional investors on the other side. And we do that basically by providing the investors with the gateway or the interface into the ecosystem, by basically enabling them to participate and to manage all the digital assets. And by that, we solve a lot of the pain points which we have described before, right? So we display the trust. We are regulated or preliminarily regulated by the German financial regulator BaFin. We provide them with a very, very common and standard interface or gateway into the crypto ecosystem, which looks very, very similar to the online banking. And we claim that we are agile by providing them always the access to the newest innovations in the space, right? So if we talk about new protocols which are being launched, if we talk about new use cases like staking or voting, this is basically our exercise and our task to provide our investors with that. We have been doing that since by now 2.5 years, where we have been live, and this is just a number of our blockchain protocols we support and where we're very strong. And on the right-hand side, a couple of our customers. And I think what we can definitely say by now is that those institutional bridges, they are essential to bring more and more institutional investors into the space. And by that, they are also ensuring legitimacy and the adoption of the whole space. And with that one, I think we're very, very well in time. And I would close my presentation here. If you want to learn more about us, please feel free to get in touch. And in case of any questions, happy to answer them. Thank you very much.